We have Deven Choksey joining us on the show this morning. Deven, hi. Great to have you on. I don't know if you could listen into that conversation, and I want to sort of ask a broader question on autos and auto ancillaries, because if we go by the commentary we just got from the Suprajit management, this slowdown is here to stay, at least for a bit, at least for another couple of quarters. Do you like anything in the auto ancillary space at this point in time, or even OEMs?
Yeah, Sylvie, good morning. Couple of, I think, points here. The European pack and particularly in Europe, I think the slowdown is very, very pertinent. But if you look at, I think, the other than Europe, I think the slowdown is not looking as threatening. China may be having some near-term issues, but I think it's not something which is to write off completely. In my viewpoint, I think though OEMs might show some kind of, in particular in passenger vehicle segment, in vehicle, motor car segment, I think they may show some amount of, I think, reluctance or the slowdown, I think, that they are talking about, but it's not likely to see the permanent impact. Second thing, structurally, few things are changing. On one side, I think we are seeing the crude oil prices coming down. As a result of which, I think the metal commodity prices coming down. As a result of which, I think ICX engine, I think, is basically once again, I think, getting a little better shape than before. So that part continues. For auto ancillary, on one side, I think they may have slightly tapered demand, but at the same time, they are margin protected because of the commodity prices coming down. So all in all, put together, it's not likely to be, I think, that bad picture. In my viewpoint, I think the one thing which stands out very clearly out here in India market particularly is commercial vehicle, and second one is two-wheelers. Both of them are basically showing distinct signs of growth. Commercial vehicle largely because of the B2B consumption in the country is increasing due to infrastructure spend, due to industry spending, and two-wheeler largely because of the rural India getting higher amount of disposable surplus in hands of consumers. So I think these two space in the auto, they remain relatively safe. And any ancillary, I think, catering to them in a systematic manner, probably I think we'll have relatively better time going forward. So the likes of Tata Motors, likes of Ashok Leyland on the OEM side, they remain favorite. Two-wheelers have actually by and large moved up, including Bajaj, though it remains continues to remain favorite within the portfolio. And within the OEM's auto ancillary space, rather, the two Mindas, the Minda, Minda and Minda Corp, both of them remain relatively, I think, more convincing plays for us in the portfolios.
No, got that. By the way, the one which was up, actually yesterday autos had a very good day. Bajaj, Hero and Mahindra were the top three nifty gainers in trade. And of course, you had the Ola Electric stock, which was up 10%. So, yeah, I mean, it was a good day for autos as a space. I mean, it's been a great run, but they had consolidated recently. Bajaj Housing is the other one. Was up 10% yesterday. There was a note from Phillip Capital. Deven, your sort of note yesterday that Bajaj Housing's market cap is greater than the next 10 players. Just briefly put that into context for us. I'm assuming if you look at AUM, Bajaj Housing is at about 1 lakh crore. The others are combined. I don't know how much if you've looked at the numbers.
Yeah, Prashant, good morning. Well, you are right. I think we put across this particular note that I think against other 10 companies in the housing finance business, Bajaj Housing Finance, I think is about 1 lakh crore kind of AUM. And rest of them may be struggling around that level only, I think, all put together. Maybe slightly more because of LIC Housing Finance. But overall, I think the AUM numbers, I think, are remaining largely skewed. And probably, I think the valuation is largely skewed in favor of Bajaj Housing Finance. Whole point here is, I think, why Bajaj Housing Finance. I think the revenue mix which comes out from, on one side, you have a mortgage portfolio, affordable and prime housing. On the other side, you have got loan against property, discounting of the rentals, the developer finance. All this portfolio of mix setting the revenue is giving them an advantage. At the same time, this company is a very, very peculiar habit. Whenever they quote at a higher valuation, like currently they're quoting it around 7 times price to book value, I think they come in the market, they raise the money, and they use equity money largely for the purpose of, I think, lending. Because on equity money, suppose on 180 rupee price, I think 10 rupees is a serviceable equity. Rest of them is, I think, is a non-serviceable equity as far as I think it goes into the books of the company. So they take the distinct advantage out of it, and as a result of it, the NIM always remains higher compared to majority of the players. who end up generating 2% NIM, whereas this company is generating or promising to generate further higher NIM of around 6 to 7%. So in my viewpoint, this is the advantage that this company is getting. But more importantly, for Bajaj Housing, I think every 10 rupee added into the stock price, it gives 7,500 crore worth of, I think, increase in the market
Right.
capitalization for Bajaj Finance. I think that is more important to understand in this sector.
Well,